This morning on BRN, where will Federal Reserve interest rate cuts impact investors and consumers? Joining me now to discuss this, Jane King, joining us from the NASDAQ. Jane, always great to see you. Thanks for joining us this morning.
Great to be back, Jeffrey.
All right, so we've got the Fed meeting, I think in September, mid-September, 18th maybe, sounds right to
Yeah, I think
me.
it's the 17th and 18th.
Okay, so they're
Yeah.
meeting over 2 days. Probably going to get an interest rate cut. At least that's what's being priced into the market. Where would we see, if we're an investor, where would we first see the result of this interest rate cut? So if they cut 25 basis points, 50 basis points, which I think is the consensus, where would we first see that?
Well, where the consumer first sees it is car loans and credit card debt. So those short-term loans. That's really when the Fed moves, that's the impact that we see first. So you'll likely see that. But this is the kind of thing where if you have a higher interest rate on your credit card, you probably want to call your credit card company and just nudge them to lower it a little bit and see if they'll do that because they might be slow to do it, very quick to raise them when rate
Oh
when
yeah, they want to make money.
but they're very slow to lower them. So keep an eye on what happens in September and follow up on that. Now, in terms of companies, of course, banks, always interest rate sensitive. Home builders could react very quickly to this as well. We expect an interest rate cut in September, and that's been in the market for a few weeks. So they've already kind of benefited from that. In fact, I just saw JP Morgan Chase stock is at an all-time high. This is kind of creeped up there silently. But banks and home builders and credit card companies, those tend to have been the first to react. But interest rates, they're like the blood of the economy. They flow through everything. So eventually everything will be impacted by this.
Right, so that it just means cheaper borrowing costs because you have a cheaper interest rate, which means that it's good for corporate borrowing, it's good for individual borrowing. Jane, when it comes to, let's talk about the banks for a second. As interest rates went up, savings interest rates went up too. So you would actually earn more on a traditional savings account because these accounts, Jane, were paying like nil many years ago when interest rates were low. Now you probably want to think about locking in or moving to a high yield savings account to lock in the higher rate because once those rates go down, you might see a lower interest rate.
They'll go down. I mean, if you're looking like at a CD, like a 3-year CD or something, it would be good to lock that in. I've seen some rates 5, 6%, 5.5%, things like that on some of these. If you want money to be liquid though and don't want to lock it up, best just to keep it in a savings account. That way you've got access to it, even though it earns nothing. But sometimes it's good just to have kind of a holding tank for some money for emergencies. So that's like the first place to go. And then look at, having interest bearing accounts like a CD or a higher return savings account after you have a little bit of money in there for emergencies.
And you talked about, Jane, the interest rates being the lifeblood of the economy. Let's talk about it on the stock market side. Now, we've been talking to you for many, many, many weeks over the course of several years. We know that corporate borrowing is important, and the market has already kind of built in, the stock market has already built in the assumption that there will be rate cuts.
Yeah, I mean, there's like I think 100% chance, according to the markets on interest rates, that we will get a cut in September. So, and then maybe another couple after that. And the market tends to kind of look ahead about 3 to 6 months. So a lot of these things that we're looking at have already happened. So it would be the surprises that would really have a market impact. But still, it looks like inflation's getting out of control. We got another inflation report on Friday morning. It came in as expected, shows inflation's still there, but definitely the increases are slowing down. So interest rates probably won't go any higher and could even go quite a bit lower from here.
Yeah, and so let's just talk about corporate earnings for a second. If you have the ability to borrow, and I guess you mentioned the banks. The banks are set, JP Morgan stock going up. Where else could we see this? Could we see this in other, because Jane, we've talked to you about, the top 7 tech stocks have done lights out, but everyone else kind of maybe not doing as well. Could this help bolster or pull up some of those other sectors? You talked about banks already, thinking about energy, manufacturing, laggards maybe in the current American economy.
Well, and anything consumer related, another all-time high, Best Buy. I mean, that was another one that was kind of like stealthily hitting a record high. Very consumer oriented company, very dependent on interest rates because people buy those big ticket items. A lot of times they finance them. So, it's just kind of surprising where you see some of these things. I mentioned the home builders. That would be another one that would see some impact from this as well, as those lower rates would eventually turn up in the mortgage rates. We've seen those come down recently, but that would help the housing market, get some of those first-time home buyers active in the housing market. So interest rates have just such a huge impact on so many sectors of the economy. And they're just, you kind of don't appreciate it until you really watch it work and how much impact it has.
Yeah, and Jane, just going into that meeting, what do you watch for? Usually the Fed releases minutes following. I mean, you won't be at the Fed meeting, I assume.
No.
Maybe, I mean, I think you should be invited, but that's a whole nother story.
Never
Um,
even tried. Yeah. I was
but
in New York, it's in Washington. It's kind of tough anyway. But well, they have that press conference after they announce the decision. So that's often where you can pick up some little nuggets. So I think what investors will be looking at and Wall Street will be looking at is what are they saying going forward? I believe they meet again in November. And so, what are they saying about that meeting? Could we get another cut? And then the other thing about September meeting will be a 0.5% or 0.25% cut. So that's the big debate. And these inflation numbers have been pretty good lately. So they may go 0.5%. We'll see. So that's going to be the big question.
yep, absolutely. Jane, we're going to have to leave it there. Great to see you as always. Thanks so much for joining us, and we'll talk to you again next week.
Okay, see you then.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, to receive all the news in one place. Details at our website. Until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.